Views expressed by CamaPlan podcast guests may not reflect those of CamaPlan. CamaPlan does not guarantee the accuracy of information provided by guests, nor does it endorse or recommend any individual or organization. CamaPlan is not an investment advisor, CPA, realtor, or attorney. You are encouraged to conduct your own due diligence before making investment choices. For any tax, legal, accounting, investment, or other questions, please consult a specialist. Welcome back to the Road to Financial Freedom, where experts share stories and secrets to unlocking financial independence. This podcast is brought to you by CamaPlan, a self-directed IRA administrator focusing on educating investors on how to grow retirement savings faster through alternative investments. I'm Ricky Trong, CamaPlan team member and podcast host. In each episode, we're going to take an in-depth look at the many roads taken to financial freedom and how they differ for each guest. Welcome back to the Road to Financial Freedom. Today, our guest is M.C Laubscher, creator and host of Cashflow Ninja, Producers, Wealth, and Capital Partners. He has many great things to share with us today, including alternative investments and much more. So please welcome M.C Laubscher. How are you today?
Great to see you. Been looking forward to this conversation. I love CamaPlan and I love the incredible community that is built around CamaPlan. So I am excited to be on the show.
Great. Thank you so much. You are a longtime friend, and I am so excited to finally be meeting you here today. So please, let's get into this. I want to hear about your backstory. I heard that you're maybe not from America and you have some really interesting stories to share with us. So I would love to hear what you have to say, give us some background, and then let's follow through with where you're at today.
Absolutely. Yeah, you're 100% correct. The accent is not Pennsylvanian. My wife is from Pennsylvania, but I'm originally from South Africa. So I actually came, you're about 22 years ago now, 21, 22. Time flies when you're having fun. Originally from South Africa, I grew up during a very interesting time in South Africa's history, a lot of change, massive changes. And to have experienced that as a young man was quite a gift if I look back now, because there was a lot of uncertainty, a lot of change, a lot of chaos. And having lived through that really shaped me, obviously, who I am today, and have shaped my worldview and my paradigm. So I really became very much a critical thinker, living through during that period, questioning everything and questioning every piece of information. Which eventually led me to the world of alternative investing. But it was definitely a very interesting time. And I feel like almost the times that we live in today, it's kind of deja vu. There's a lot of uncertainty for investors out there. There's a lot of changes happening in the economy, local, nationally, and globally. And there's a lot of chaos that's already started across the world in many different shapes and sizes and forms. So it's kind of deja vu if I think back just from growing up in South Africa. The United States has been incredible to me. When I first came here, I was just absolutely blown away about the incredible opportunity in this amazing country. And I couldn't believe the upward mobility that it allowed for anyone. So you could come here, you could bring your gifts, your talents, your enthusiasm, and your work ethic, and the future is unlimited, right? It's really, truly limitless. And it's still that way today for folks that see the opportunity for what it is in the United States. I actually ended up in the US. I played in a sports league over here, and I traveled quite a bit. And during my time that I traveled, I was, one of those guys that read. I love history. I love economics. Those are two of my majors from university. And I read more about history. I read more about economics. And my mom actually gave me this book called Rich Dad, Poor Dad, which really opened my eyes and changed my paradigm, essentially, and my context of what wealth is, what the opportunities there are in the world of money, in the world of investing. And I took action. I bought my first property probably within 6 months of finishing the book. I was very young at that stage, inexperienced, ready to learn and make mistakes. And I still remember collecting the rent from the first property that I bought. After I put tenants in there and paying all of the bills associated with it. And at the end of the month, there was money left over. And I couldn't believe it. I was like, wow, this is just like in the book. There's cash flow. There's money left over at the end of the month. And I thought to myself, well, how many times can I do this? How many of these properties can I acquire, which will have some money left over after the rent was paid and all of the expenses were paid at the end of the month? So that was my first light bulb moment, was cash flow and the importance of cash flow and being a cash flow investor. And then, of course, I started to learn about how the game of money is played and that the rules of the game of money is essentially the tax code. So I started looking at, well, you have to have great cash flow for it to make sense, but it also has to have good tax advantages. And of course, if you do it properly, there is an opportunity for appreciation in the asset which you invested in. So when those three things all came together, I'm like, this is another light bulb moment. And then I started to, through my study, look at how money is managed and really started to deep dive in the game of money and capital. I started to realize that the banks have that pretty much figured out. So I needed to learn how to become my own bank. And then, of course, life takes so many turns in different directions and so forth. I learned more about the fun part of investing and of it being a team sport. I played a lot of team sports. And I thought when I first started on my investing journey that it was a kind of a solo sport like a tennis or a golf can be, but it wasn't. It's quite the opposite. I realized that, yeah, you can be quite successful and do pretty cool things by yourself, but you could just do incredible things when you do it as a team. And I started to learn more about how to invest with some of the best folks in specific niches. I call them Cashflow Ninjas, how to partner with them, and how I can essentially diversify an investment portfolio and accelerate my investing efforts by partnering with the best Cashflow Ninjas in different niches and different markets and doing it as part of a team instead of this solo investor. So those were huge light bulb moments for me. And today I try to share those messages with folks too through different platforms. Some folks might have heard about Cashflow Ninja, the podcast, which I started 6 years ago. We've been incredibly blessed to have found such a large audience out there. So we've been downloaded in about 180 countries, millions of downloads. It's turned into an education company. And then I have other businesses. We have Producers Wealth, which essentially help investors become their own bank and create their own banking system through the infinite banking strategy. And then also Producers Capital Partners as we look at specific niches within real estate and within hospitality and energy to invest with like-minded investors through syndications.
Wow, that's a mouthful. First off, you are so busy. I honestly, wow, I'm just blown away. I love your analogy with sports and wealth. I mean, they really do go hand in hand. It's not an individual asset. It's definitely teamwork that makes that happen. And that's just so incredible. Your journey from, just picking up a book and inspiring you. I love that because I'm actually inspired. That's my next audiobook I'm listening to is Rich Dad, Poor Dad. I'm really excited. And it's actually because I listened to a few of your episodes of their podcast and you also spoke with Robert Kiyosaki. And it just kind of was like, okay, it's time. You have to read this book. Everyone talks about it. So I totally get that. And I hope that helps me on my way to financial freedom and unlocking, the secrets that way. But honestly, tell me more about this being your own bank. How does one become their own bank, especially now with the younger generation really not having a lot of funds to work with. And it sounded like you didn't have a lot of funds to work with when you started. So I think you could really be the best teacher on this information for me.
Yeah, no, that's a great question. And to your point, yes, I mean, I literally came with a backpack, a suitcase, a sense of humor, sense of adventure, and about $500 to the United States. And I started to learn and study what the best folks were doing in the investment space and in the world of money, and especially when it came to personal finance. And my message has always been to folks: you are where you are. We all start from a place. Don't feel intimidated when you get started. You can do what the Rockefellers do, and you don't have to have the Rockefellers bank account. You could essentially look at what they're doing and what very successful people do, and you could essentially take the blueprint and incorporate the same kind of strategy and the same tactics within your own wealth strategy. You just do it on a much smaller scale. And it's quite incredible. If you just start by modeling what they do, you'll see incredible changes. We always think, it's that be, do, have kind of concept. Which we all think that, well, I have to have something in order to then do something, and then I'll be something. I have to have thousands of dollars, and then I'll become an investor, and then I'm an investor. So if you kind of reverse engineer that, even if you're just starting out, well, if you want to become an investor, become an investor. What do investors do? Well, they invest in their own education, they learn, they study, and they look at deals. Now, you don't have to have hundreds of thousands of dollars to look at deals. Trust me, I didn't. I just started looking at deals, and I started to analyze these deals, even when I wasn't in a position to capitalize on it, but I was learning constantly as I was doing that. And eventually, as I accumulated some capital, by the time I had capital to deploy, I knew the difference between a good deal and a bad deal. And I said, I read Rich Dad, Poor Dad, the book, and I took action probably within the first 6 months. Now, I'm a little bit of an obsessive personality. So in 6 months, I looked and studied at a lot of different deals that, would take most folks probably 5 years, because I just went down this rabbit hole and really immersed myself into it, which I believe is the only way that you learn something, right, is to really immerse yourself into something. Tony Robbins talks about this too. So if you're starting out and you want to be an investor, just turn the have, do, be into be, do, have. Be the investor, do what investors do, and you shall have what investors eventually have. So that's what I would share with folks. And then if you look at it from the model of what the wealthiest folks do, I try to really simplify things. And especially when it comes to, I bring some of my sports background into it. I love systems, so you have defensive systems, offensive systems, and then there's tactical things within those systems. But so if I look at from a big picture, this framework that I've seen from interviewing these incredible folks and studying them, I could really break it down very simple for folks. The first thing that all of them do is they produce capital, they make money. And they all do it in different capacities, right? You could do it as an employee, you could do it as a self-employed person, you could do it as a business owner or as an investor. But all of us, in some way, shape, or form, we produce capital through our production and our creation. And we can increase and enhance in the way that we do that. We can make more money every year. Even if you're an employed person, maybe there's a bonus because you did something additional, extra, or you took on a different role in the company. And then the second step really then becomes, after you've made money, where do you put it to protect it? It has to reside somewhere. So yes, you could put it in a coffee can in your yard or under your mattress. But most folks know we could put it into banks. We could put it into qualified plans. We could put it into insurance products. We could put it in metals, there's a couple of different ways of where we could position capital. The third step really is then to deploy that capital into things that produce more capital. Now, you could do it as an investor and as a cash flow investor, like, for example, investing in real estate. You could do it as a speculator in times of great uncertainty and change and chaos. There's incredible opportunities for speculators out there. And a speculator just takes advantage of distortions in the marketplace. And of course, you could allocate it in areas that you see massive growth potential in, where capital is flowing to. Like, for example, the cryptocurrency space has been a space where a lot of capital has flown into. And then also greener energy projects, alternative energy projects, and so forth. And then, of course, you make your money, you protect it and position it somewhere, you deploy it, and now you have to really protect everything that you've produced and created, positioned and deployed. And you do that through tax strategy, through proper asset protection, and through proper estate planning. So where the banking function comes in is, where do you allocate the capital essentially in the second step? And that's what I'm very passionate about to speak about, because essentially there's ways that you can position capital to essentially become your own banker. Now, there's many different ways to position it. The first thing that I think of where to put money is my philosophy of, well, I have to protect it from taxes in the future. Because if we look at the world that we're living in right now, you don't have to be a soothsayer or have a crystal ball to realize that governments all over the world have been very irresponsible fiscally. They spend more money that they have or that they will ever be able to produce. There's so much in debt. And there's only three ways that they're essentially going to recuperate that capital, and that's either by raising taxes. They're going to print more money, or they're just going to default on it, essentially. So if I'm going to position capital, I'm going to look at places where I can position it to protect me from future taxes. Like, for example, a Roth IRA would be a great vehicle because you can position it in there. You're in control of your capital. You can self-direct it, and it's protected from future taxes. There's limits, though, of how much money you could put into a Roth, for example, right? And there might be some people that don't qualify for a Roth because of their income. So where do you then put it? So that's where the insurance products, which we utilize, come into play, which is the overfunded high cash value life insurance products. It's got an insurance connotation, which kind of makes people think, well, life insurance, doesn't someone have to die essentially for someone else to benefit? And that's how it's perceived by the majority of the public. But essentially, there's a way to structure insurance vehicles, like how the ultra wealthy and the rich structure it. It's funny that the Wall Street Journal has referred to this method of structuring as the rich man's Roth, because essentially you could put unlimited capital into these vehicles. The money is in there. It's guaranteed. It is guaranteed to grow. It earns dividends because you set it up with mutual insurance companies. They're not listed on the stock exchanges. They're out of the Wall Street casino. The growth and the dividends are tax-free. You can access the money tax-free for your investing through a credit line which you establish. And then, of course, eventually when you pass, the money through the death benefit is transferred tax-free to your estate or your beneficiaries. So it's very, very, very powerful from a tax strategy in protecting your capital. And you can also access it, for whatever reason, whether it's emergencies, whether it is college savings for your children or grandchildren. People have built family banks using this, like they do in family offices, and also for investments. So that's kind of what we use. We use these overfunded whole life insurance policies structured with a mutual insurance company to protect capital, which I think now is a very, very important time to have that conversation. One last thing that I'd share before I'll pause for a second is the other thing that's great is about this strategy, essentially, without getting too much into the weeds, you essentially access capital in those policies through collateralizing the cash value through a credit line, just like you would access your home equity in your home through a home equity line of credit, a HELOC. So you don't actually access the money. You have a credit line secured by it, which means your money is doing double duty. In the policy, it's growing tax-free with uninterrupted compounding. And then you can also access the liquidity through a credit line to then use to invest into, real estate.
Wow, that's a lot. First off, that's a lot for me to digest, right? And then that's really interesting, everything you're saying. Like, before we got onto this podcast today, I was talking to you about how my husband and I are renting out our property currently, and we are looking for, new investment options. And he's definitely the one that's looking into like a HELOC type thing. So if I wanted to learn more about that specifically, is that something that you teach in a course or on your podcast? Tell me a little bit about like how someone can go about finding more information out about that.
Yeah, we have a free a webinar that we did for folks at yourownbankingsystem.com. It's about 36 minutes. So if you play it at twice the playback speed, it's only going to take you 18 minutes, so under 20 minutes. But essentially, we walk you through everything, how we structure and set up these policies. And we even share some examples in it, and then how you could use it to buy more real estate. One of the main things that this strategy addresses right now, and why I think this would be very valuable for your audience, is this is essentially a big challenge that a lot of investors have right now. Is, where do I put capital? Where do I keep my cash? Because in a world that is so uncertain, that brings about a lot of changes and have chaos, and we've seen markets correct, where do I put it to protect it so that I can access it eventually and go shopping? Everybody loves a sale, but if you don't have money for the sale, guess what? It's not really a sale. And a lot of investors that are experienced have seen many of these ups and downs. They've been through 2008. They've been through the early 2000s. They've seen different ups and downs in the market. And a lot of folks are seeing right now that we're sort of in a pre-crisis mode right now. If you take a step back and you just look at the past, 50 years, now's a good time to go to cash. And a lot of investors are going to cash, but then where do you put it? And that kind of ties into, I think, another thing that is very important for investors to learn, especially if you're just getting started as an investor. I wish I would have learned this, when I first got started. But a very big thing in investing is this concept of counterparty risk. So it's not just important of what your money is invested in, it's who it's with. So where you put your money, very important of who it's with. I'll share with you an example. So in 2008, 2009, the world had this massive financial crisis, known as the Great Financial Crisis. And we still see, these clips on the news of like Lehman Brothers closed down and people walk out with their boxes, their final day at Lehman Brothers, and Bear Stearns went down, these huge investment banks in New York. And it was a shocking moment for the entire world to see this, because these were names that have been around for a while. And to see them all of a sudden just go out of business was quite shocking. Now, think about this. Lehman Brothers and even Bear Stearns had clients, and there were a lot of clients that were on both sides of the markets. So they actually had clients, both of those two firms, that thought that the market was going to crash, and they had shorts, meaning betting against the stock market at that stage. So they were right. But their money, the counterparty risk with their money it was in a bank that went under, an investment bank at that point. So even if you were right, during 2008 and 2009, and you saw this coming and you anticipated it and you positioned yourself for it, and you even speculated through an option strategy, shorting the market, you lost all of your capital. So that's the power of counterparty risk. And I remember being a very young man where this happened to my grandparents, where they had money in a bank, not an investment bank, just a standard regular bank. And then all of a sudden that bank went out of business and they lost the majority of their money that was in that bank. So it's very important for investors to understand, especially young investors when they're starting out in an environment with so much uncertainty, an environment with so much changes, an environment with so much chaos, that it's very important where your capital is, but it's even more important of who your capital is with. So with that said, when you're looking at positioning capital outside of a casino, if you will, like mutual insurance companies, from a counterparty risk standpoint, for me personally, is that, man, they've been around since the mid 1800s. They've, one of the carriers, they've seen the Civil War, essentially. Wow. They were around before the Federal Reserve was created. They were around during World War I, during World War II. They were around when the Bretton Woods monetary system was created in 1944. They were around in 1971. When Richard Nixon on August 15 took the world off the gold standard, essentially, because he closed the gold window. So they've been through all of these massive changes. And how did they react? Well, if you look at their past behavior, they were pretty solid during those times that were very uncertain. It's not unprecedented times that we're in. I love it when folks always say it's unprecedented. I'm like, just look at the past 100 years, how crazy it's been. The past 150 years, it's always been wild. Which is why it's exciting, right? But you look at all these things that have happened before, how people have behaved in that environment, and the chances and the probability of them behaving similarly is probably very high.
Yeah, it's one of those what goes around comes around situations. Things always tend to repeat themselves after so many years. So I totally understand where you're coming from. So that's a lot of information, again, because it's all new to me. So I'm really hoping our audience is getting something out of this, because if I'm learning something, they're learning something. And this has just been so great so far. So tell me more about like a wealth strategy, things like that you particularly do in your everyday business, or things that you teach. What kind of wealth strategies are there out there that maybe people don't really know about?
Absolutely. So if I was just getting started too, and even if you're more experienced, that framework is really what I would use, and then assess where you're at. So the first thing that I would do is look at, all right, capital creation, making money. What are my sources of income? How many sources do I have? How do I increase those sources of income? And if there's one source, you probably want to add one or two other ones. There's a lot of different side hustles that you can do. And by the way, a lot of very successful people start off with a side hustle, and that side hustle becomes their main source of income, and eventually they build an entire business around that. That's essentially what I did. I started with several side hustles while I was doing consulting. And my side hustles turn out to be, my businesses. So look at your sources of income, look at how you can grow your income, look how you can diversify certain income. For example, if you have a business that's brick and mortar, how can you add a digital element to that? I've seen a lot of folks do that very, very successfully. There's even restaurants which, think about a brick and mortar. You literally have to go in there and sit down and eat a meal or pick up some food. They've added sort of like a recipe book or from a digital side of it. So, hey, here's some of our recipes. You're not giving away the store. You just say, if you want to cook some of these meals to yourself, here's how you can do it. And, I saw this at one restaurant, and the person was saying, man, aren't they going to close up shop if they give away the goods? I'm like, well, they're clearly not giving away all the goods, but now there's another revenue stream. So income, figure out where you're at, and where you want to go. Then the second part is positioning capital. Where are you putting your money right now? You know, banking, the banking system itself. You know, I would say, you know, we're going through a time period where there's going to be a lot of changes, and I would be very, very careful of having a lot of capital in a bank specifically. So look at different ways where you could put it, so that it could do different things for you. You know, we've shared some of the qualified plans, and more specifically the Roth one. We shared the insurance products. You can also hold some metals, which is essentially wealth insurance, gold and silver. There's many other different ways that you can position capital. Look at where you are positioned. Look at the counterparty risk, at how you're positioned, and then make some changes if you need to there. This is, by the way, what I do every single day. I look at that and look at where my capital is positioned. Look at the counterparty risk. Has anything changed? Do I need to move some capital? And by the way, I've moved capital over the past 12 months from certain areas because I felt the risk was too high at where it was from a counterparty risk standpoint. And then essentially the third element is cash flow investing. I'm a cash flow investor. I love cash flow. I love tax benefits. I love appreciation plays in these investments. Look at some of the investments that you have right now and how you can also diversify that. I just wrote a book, The 21 Best Cashflow Niches, because I felt it was so important today that investors should diversify their income streams. If your cash flow is only coming from single family real estate, and if single family real estate gets hit, then what happens then? If it is only coming from multifamily and the commercial real estate gets hit, what happens then? The same with energy, the same with all these other different niches that I mentioned. So if one stream goes away, do you have others that you can fall back on? It's going to give you a lot more options than less options in a world. And by the way, no one can predict the future. So I'm very much accepting that one of the areas that I'm invested in personally will get clobbered in the next 12 to 18 months. And I'm okay with that because I looked at the risks and I positioned myself for an eventuality that something like that's going to happen. And then this is the non-sexy part of investing, but probably the most important part of it is how do you protect all of this? Meaning, do you have a tax strategy in place? And a tax strategy doesn't involve just sitting down with an accountant when you're ready to, or a CPA when you're ready to file taxes. A tax strategy is sitting bare minimum down with an accountant or CPA or a tax strategist maybe once a quarter every year to figure out where you are, where you're tracking, what do you need to do from a capital allocation perspective and a deployment perspective to reduce your taxes legally. So tax strategy is huge. And then protecting it, asset protection. When economies go down, even if you think you might not have a lot, if you're just starting out, people get sued. And in the United States, great country that it is, you don't have to do anything wrong to get sued here. It's a very litigious society. So even if you're just getting started, you don't want to start out, build some momentum, and then somebody sues you for whatever reason. And now all of a sudden, that was a corner that you cut. And now essentially they can access most of your assets and your capital. And then also that brings into estate planning as well if you have a family and children and so forth. So that's what I would do. I would sit down, use that framework. Again, you don't have to be a Rockefeller to do what the Rockefellers do. Work through the framework and say, as an investor, mapping out a strategy, what do I need to work on? Do I need to find different income streams? Do I need to increase my income? How can I do that? How's my capital position? What am I invested in? Do I need some more diversification in my portfolio? And then am I protected if all of this stuff goes south from a tax strategy and an asset protection strategy? A lot of young investors that just got started out in the crypto space, for example, which is very, very exciting, still is very exciting. It went just through a huge correction, which is very, very standard operating procedure for crypto. We've been through a number of those, but they didn't think about any tax plan. So there's a lot of them that are in trouble right now because they did some things as the markets were turning that had taxable events as a consequence. So you got to think about all these things in this framework constantly when you are making moves inside of your own economy as an investor.
Wow, that's so interesting that you touched on like crypto. I know earlier we spoke about like greener energy projects. I know a lot of younger investors are interested in that along with the crypto. What do you think about that, or what's your take on greener energy products?
Yeah, so I always look at capital flows in the economy, because that essentially where capital is looking to essentially accumulate somewhere. Now, where does it go to? It goes where it's treated best. And then when there is exciting newer technologies, and there's a lot of smart people moving into that. So if you just take a step backwards and look at our economy as a whole, where is capital moving to? Because it's always moving around, and where is it moving from? So, the crypto and blockchain space, most people just think of, crypto, they think of Bitcoin or maybe Ethereum or maybe a doggy coin or two, but essentially it's an entire ecosystem of technology. And there's a lot of different businesses and a lot of different entrepreneurs and a lot of smart people moving into that space. When that happens, the same, if you think back in the early 2000s in Silicon Valley, when a lot of smart people are moving into a specific sector and a niche, you're going to see a lot of innovation. So when there's innovation in a space, more capital will flow to that. So I think we're going to see something similar there to what we saw in the early 2000s in Silicon Valley. Is a lot of smart people moving into a place, a lot of innovation brings in a lot more capital and a lot more investors and entrepreneurs. The same thing with, greener energy and, the carbon credit kind of world is essentially you look at a lot of the, you look at a lot of the laws that are passed in countries around the world is obviously the government's policies dictate a lot of what investors do and where capital flows to. Just think about real estate in the United States, and also, other energy projects even before the greener energy projects came about. Now you have governments around the world which their policies are very much incentivizing all these greener projects and these greener energy projects, these alternative energy projects. So what is the consequence of that is, there's a lot of smart folks now seeing what the government's policies are. They're moving into that space, which means there will be more innovation and there'll be more folks, in many different industries that's going to plug into that, like the automobile industry, like with Tesla and Elon Musk and so forth. And they're going to be rewarded for that. And there's more capital that's going to flow into that. So if you're a young investor starting out, this is just two examples. There's a lot of other examples too that I can think of. But look at the economy, look at the government policies, not just in the United States and around the world. And then look at the incentives that there are, and you'll start to see capital will move around to where it is incentivized to go to. And you could position yourself in those industries. You could be early, you could be a little bit later too. But there's great opportunities in a lot of those different niches.
Thank you so much for pointing out that, the government kind of dictates where the investments usually become. I've never noticed that before, because I think I mentioned it at the beginning or before we were speaking today, but I'm new to the investment world. I've been involved with it with my job, but I've never really been an investor until recently. And just learning a lot of this is so intriguing to me. And then especially, getting a little insider information, I guess, if you want to call it that. But I love that. And it really is like you were talking about, like chaos and massive growth. Like it does like show that when people are, scared, they'll change their investments. And I think that's what leads me to my next question is, what does a diversified portfolio look like to you? Because I know like it looks different to every person. And so, since you're so, well versed in this industry and you've learned so much just from listening to other people's podcasts, and it sounds like you've changed according to what different things are that you're seeing. So I would love to know what a diversified portfolio in your own eyes would look like, for just an example for one of our younger investors coming into the game.
That's a great question. So I will share right now, in this world that we are at right now, where there's so much uncertainty, so much change. And by the way, the change is going to be rapid and very fast. We've already seen it. It almost feels like we fast forward into the 10 years into the future in like 2 years, less than 2 years. And it's going to bring a lot of chaos, because when there's economic disruption, it manifests itself in society, usually chaotic, right? And also in the political environment. That's just how it is. It's all connected. So how do you build a diversified portfolio in times like this? So there's 4 areas that I look at and positioning myself. The first area is cash. And folks kind of like roll their eyes or smile when I say that, because we've all heard this, right? The US dollar is being devalued. Cash is trash. There's inflation. We've all heard this, by the way, and I've said all of these things myself on my show. And I agree with all 3 of these things. But we're in a time where none of us have a crystal ball. We don't know what's coming next, the next month, the next 6 months, the next 12 months. Cash plays a very, very important part as a volatility buffer. So in times when you see sharp market corrections, it's great to have cash to go shopping. Again, it kind of sucks when you have to go shopping and you don't have any money to go shopping with.
Been there.
And even if you see a massive spike in the increase in asset values, it's still great to have cash. We're always going to need cash. And I think for young and older investors, one of the biggest lessons that I've learned every single time when I was in a bad situation as an investor is because I didn't have enough cash. So you want to have cash. And again, where you position cash is very, very important because of counterparty risk. That's why I use mutual insurance companies. The second part of it is we're essentially, also, there's so many cycles that's coming together all at once, but we are living through a time period which I believe folks will look back at and they will say, this was a monetary reset. Now, what do I mean by that? It was a change in the world monetary system. Now, that sounds scary to a lot of folks, but this happened in 71, August 15, 1971. This happened in 1944 at Bretton Woods. This essentially happened around the World War I in 1913 with the creation of the Federal Reserve through the Federal Reserve Act. So we've been through these changes before. And in times where you have changes in the world monetary system, you look at you look at a vehicle that's been around for centuries, and that's gold and silver, which is wealth insurance. A 1 ounce of gold, a gold coin, and a 1 ounce silver coin today was a 1 ounce gold coin and a 1 ounce silver coin 100 years ago, 200 years ago, 1,000 years ago, 2,000 years ago. It was the exact same. So it provides some stability there too, and it's insurance. The third component of this is an investment portfolio, a cash flow investment portfolio. And then the fourth part is an area for growth. Now I'm going to talk about them kind of together. How do I diversify that? So for me personally, when you see a lot of when you see in a downturn, when you see economic recession, I believe we're way past the recession. I think we have our foot in the door of a depression where we are currently. If you just look at what's going on Main Street and you look at the actual data, unspun, right? Now, when you look at that and said, man, the economy's tough. It's going to get a lot tougher. Everything that's going on is going to make it tougher for the average person. Where do you invest? How do you diversify your portfolio? And I look at Maslow's hierarchy of needs. So I look at real estate. People are going to need a place to live. So I invest in the niches within real estate where I feel that folks are going to live, whether it be in a certain C-class apartment building in multifamily, whether it be mobile parks and mobile homes. And because of the changes that's going to happen in the housing industry, self-storage is probably going to play a role in that, because self-storage, if people in an economy that is booming, people are moving. They're buying bigger houses, and they have a period of transition where they need to put things in a certain place. Self-storage benefits from that. When in an economy where it's going down, that same asset class benefits because people are downsizing. So I look at that, but that's all sort of in where people live and where they put their things. And then I look at food and agriculture. That's also another area to diversify it. Physical commodities around food and agriculture. And then also, as we mentioned, energy. There's a massive, massive global change happening right now in energy. I think most folks are starting to realize that if they look at the gas pumps and the prices at the gas pumps. So energy is not going away. It might be different forms of energy, so you can position yourself to benefit from that. A lot of folks that have done really, really well this last year have been involved in natural gas, oil drilling, and they've been involved in nuclear projects, which includes uranium. They've done really well in coal projects because the demand is still very, very much the same, but the supply has been significantly reduced. So economics 101, when there's an imbalance with supply and demand, it provides opportunity. And then areas of growth, you look at, the crypto industry, you look at greener and cleaner forms of energy where capitals are flowing to. So that's kind of how I'm playing it in those four areas: cash, wealth insurance, gold and silver, a cash flow portfolio with housing, with food and agriculture, with some energy in there. And then also, in my growth bucket, I put, I invest in companies in up and coming industries, such as the carbon credit space, such as the cryptocurrency space.
Wow, that's also interesting. I'm taking notes here because I need to start figuring out where my investments are going to be going into. So thank you for that. I really, truly appreciate that. The knowledge is just, that's the key, I think, to everything, is just being well-versed and understanding where everything is coming from in order to build your wealth. And that's what I think I've been learning over this podcast series so far, from, the few people that I've had on it so far. But it's definitely, knowledge is power, I think, when it comes to this kind of building wealth strategy. And I guess on that topic, the real question that everyone wants to know, that we're going to ask every person that we interview here, is, what does financial freedom mean to you? It means so many things to every individual guest. And we already heard your road to financial freedom and where you're at now, but what does it mean to be financially free? Just to you specifically, it'll definitely be different each person.
Yeah, it is the freedom to use my time as I choose. It is the freedom of not having to worry about money, where money's coming from. It is the freedom to spend time with the people that I love to spend time with, in the locations that I want to spend time with them in. And also it is the freedom to work on the things that excite me, that is aligned with my purpose. So that's how I would sum it up, is, that's what it means to be completely, have financial freedom. It's just, I get up in the morning, I can spend my time how I want to spend my time, because the finances are taken care of. I could spend my days with who I want to spend with people that inspire me, the people that I enjoy spending time with, and also goes to locations that inspire me, and then also be focused and driven by purpose. And that's one of the things that has really been a blessing, especially the past 2 years. I mentioned earlier in my story that I came from South Africa and I grew up during a very interesting time where all these things were in place: uncertainty, lots of changes, chaos, and so forth. And I'm living through it again. So I feel that, having that experience as a young man, I can help other people build and protect wealth during these times, having lived through that already and kind of seen how this all plays out. So it's become a very big, passion of mine, and it's a very big purpose of mine. So, but that's what it means to me to be financially free.
That's amazing. And it's funny because everyone seems to mention time is always financial freedom to them because time is money in a sense. Like you can't gain back the time that you've lost. You can always gain money or wealth again, but the time is going to be lost once it's gone. So I really love your outlook. I think that having your past experience being from South Africa and going through this again, you're now a mentor and you're able to teach people because you've been through it. You kind of, not to know what to expect, obviously, because everything is a little different in terms of, how it's going and how quickly it's happening or, and definitely the times that we're in, it's always going to be fluctuating. But I think that's what really makes you a mentor and very knowledgeable on these subjects. And I'm really glad that you were able to speak with us today because I think this is such an amazing topic. Yourownbankingsystems.com with that video. I'm excited to watch it. I hope our audience watches it and learns something. Is there any last words or, inspirations that you can give to our audience before we end our session today?
Yeah, I would say, just to add to kind of that theme is, I am very comfortable being uncomfortable of living through that time. And I know that a lot of folks are very set in their way and they get very, frazzled and they're very uncomfortable when they're out of their comfort zone. But of course, that's when all the growth and the learning sort of happens, so growing up in South Africa and especially having played at a very high level in sports, I always had to be out of my comfort zone. So I would say to folks, to investors too, that if you can increase your emotional IQ, which is a lot of people talk about financial IQ and just your academic IQ, but your emotional IQ as an investor is going to be huge and such a big asset for you. And essentially what that means is you can stay cool, you can stay calm. You have certain frameworks and exercises that you can go through to very cool and calm and collected think through certain things and certain scenarios. If you're comfortable being uncomfortable and you can stay cool and calm in times where other people are losing their minds, you're going to do very, very well as an investor during this time.
I couldn't have said it better. I think those are great words to live by, especially with your sports analogies. They never get old to me because they really relate to everything. And I just staying cool and collected in a time of chaos, going back to our chaos discussion, is definitely, the best way to handle anything. You don't want to be scared and nervous. You want to have that growth opportunity. So I think that's a great way to end this, to be honest with you. And MC, I just want to say thank you so much for being with us today, spending your time. Again, going back to time, it's always important. So I hope it was a good use of your time. And I just want to thank our sponsor, CamaPlan, and our producers at Honeycomb Productions for being able to have this podcast. If you go to the QR code, if you're on YouTube, please scan that. It'll take you to MC's videos. It'll take you to the Cashflow Ninja, or go to cashflowninja.com and listen to his podcast. They are inspirational and very entertaining to listen to with all the cool guests he's had on in the past 6 years. It's awesome. And then please, if you want to learn more about self-directed IRAs, please go to CamaPlan.com for more information, or you can request a consult. I really appreciate you tuning in today, and I hope you all have a wonderful day.